Hi everyone, I'm Steve and this is the Dividend Dad Channel. If you're new to this channel, then this channel is all about me growing my wealth to 100k in 8 years by using a dividend focused long-term strategy. In this video, we're going to look at what happened to my portfolio in February. Be sure to watch until the end, where I will share with you my market insights. And now, let's get the boring disclaimer out of the way. Remember that I am not a financial advisor and you should do your own research before making any financial decisions. February 2025 portfolio update. In February, my portfolio grew 4.77%. This is very good considering that to reach my yearly goals I need an average of 1.2% gains per month. My portfolio also outperformed the S&P 500. The S&P 500 was down by 1.42%. I'd say my biggest gains would have been in the health sector, with CVS and ABBV both gaining between 20 and 30% each. These were good buys in January. AMD and ACB have brought me my biggest losses in percentage terms, but their equities are quite small, so I can hold them for now. In February, I increased some existing positions. When I'm increasing existing positions, then the research is easier because I have already decided that this is a company that I want to invest in for the long term. But that being said, I'm always watching, reading, and listening to business news on a daily basis. So if there was something to happen that could affect my position, I should know about it. So what position did I increase? Well, the Bank of New York, I increased that by $117, and the American Express by $117. I wanted to put some more financials into my portfolio because I was tech heavy in January. This caused me some unnecessary declines in my portfolio, so now it's time to diversify my sectors to help ride the volatility seen at the moment this year. And I put $231 into Coca-Cola. I doubled up on a Coca-Cola because I could get more shares for the same amount of equity, and Coca-Cola is always good when the price is nice. They've also increased their dividend payments again for the 66th year in a row. So let's have a look at the dividends that I got paid in the month of February. CVS $1.37, Bank of New York 19 cents, MasterCard 7 cents, American Express 7 cents, ABBV 86 cents, Colgate 15 cents, Caterpillar 5 cents, with a total dividends of $2.76. My monthly contribution, as always, is €457, and that exchanged to this month, or the month of February, to $467, almost $468. And the dividends I was able to reinvest was $1.37. This came from the CVS. So the total monthly investment was $469. At the beginning of February, the market looked quite volatile. Trump's tariffs were contributed to the market uncertainty and the month started off slowly, with investors moving their market allocations into bonds or gold. But as the month progressed, more and more companies met or exceeded their earnings. This brought back some confidence to some investors and the market started to see some gains. This month ended with over 80% of the S&P 500 companies meeting or beating their earnings. Despite this though, the S&P 500 still declined by 1.42% in February, but it still holds a year-to-date gain of 1.28%. My next steps, well, if I'm honest, I'm not too sure. There's so much volatility and uncertainty in the market, but companies are still producing good earnings, so it's a difficult choice, really. But I think it's time to remember one of Warren Buffett's famous quotes: be fearful when others are greedy, and be greedy when others are fearful. Well, now, investors seem to be acting fearful. They are moving their investments from stocks to bonds and gold. Bonds and gold hold less risk and also less potential gains. So I'm going to watch the valuations in the stock market and hold until I see something that takes my fancy. Well, thanks for watching. How are you navigating the current market uncertainty? What's your strategy? Let me know in the comments. And as always, please like and subscribe, as it really helps to grow this channel.